Tesla stock price up $40 a share at $517. Why? We have the answers for you in our show today and look forward to rolling through them. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We wanted to note that we want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So we have an interesting circumstance happening right now, which is obviously Tesla stock is up dramatically today, and we think that's terrific, obviously. So what happened today is there are two pieces of news that have actually popped up. The first piece is that the government of China has elected to extend the tax credits that were supposed to apply or end in July of 2020. Evidently, they haven't decided when that will be. We wanted to review the fact with you that the primary issue affecting Tesla right now is the fact that there's a gentleman named Colin Rust, who's a managing director at Oppenheimer and Company in New York. If you'll go back to, if you type into your Google bar, Tesla, CNBC, December 18th of 2019, there's an explanation by Mr. Rust there why it was that they upgraded Tesla stock price. So usually what happens is an analyst will write a report, hand it to institutions or other investors, and then as a public, we have to wait to see that information that might affect the stock in that way. In this case, it's a little bit backwards. CNBC had Mr. Rust on their show, and I think their goal was somewhat to bash Tesla, given how well they were doing. So they did have a kind of a skeptical announcer that was there. And so she shared her thoughts, and Mr. Rust responded to her. So one last precursor would be to just note that we're in a period right now between now and when Tesla announces earnings on February 18th, where analysts' upgrades or downgrades will be hugely impactful on the stock of any company, but especially Tesla. So we're kind of stunned because we were expecting Tesla to sort of come back down into the 420 to 450 range. And so we're very impressed to see the response of the market to Tesla's stock price in the positive direction. So while this is a good upgrade, I think the stock price is good where it's at and rising. Mr. Rust indicated that they're raising their price target for Tesla to $635 a share. Now, if you combine with a couple of other upgrades that are just over $500, that is an interesting note. I just want to repeat to you, please go to CNBC, December 18, that's 1 and then an 8 of 2019. And if you type in Tesla and CNBC for that day, there's a story that's presented there. And he explains the logic behind the upgrade that he just got. So what I wanted to review with you is sort of the general points that he shared and that obviously we agree with because we definitely think that Tesla deserves more. The first key point that he made is that if you look at the European OEMs, one of the problems that's emerged is there's $1 billion worth of cash that Tesla will be getting from Fiat and other partners in Europe heading into over the next 2 years and possibly longer. What he further explains is that there's a problem going on with the European OEMs. Number one, Daimler is cutting 10,000 people, but they only sold 58 copies of their EQC vehicle. So Daimler had anticipated that they'd be able to A, make EVs by now, and then B, they'd be able to sell them in a large enough number to offset the large EVs that they're manufacturing. So as a result, while Tesla's getting $1 billion from a partnership with Fiat in Europe that's already signed, it's actually possible that other OEMs that are short on meeting their goals will actually have to join, and so the $1 billion number actually might be low because there are others that may need to join, especially because the number of Model 3s or other Tesla vehicles that are being sold is increasing. There was some skepticism from the CNBC staff regarding whether or not it was valid that Tesla would be profitable beyond just the tax credits they were getting. And what Mr. Rust indicated is that Tesla has now got their manufacturing in a solid state. And so as a result, as they're able to increase the volume that they're producing while maintaining and decreasing costs, it means that they can actually make money on lower prices. So what he pointed out was it's endemic of that fact because you'll notice that Tesla lowered their price in China by a couple of $1,000s, and they could afford to do that and maintain their profitability. And this is because of better throughput through the factory. Another argument that was made against Tesla's success was that there might be a problem with Elon Musk and him doing something crazy. And again, the analyst pointed out that Tesla is in a structure currently where they're able to get better and lower prices that are coming as the number of vehicles continues to rise. So therefore, the profitability that you're seeing is being aided by the additional dollars from the tax credits, but they've already got profitability, and that profitability is solid and growing, especially when we add in China. A note that he didn't talk about that we thought was interesting was that in the United States, Tesla's profit margin, based on last quarter numbers, is about 22%. The China margins are supposed to be someplace in that 33% range, which is consistent with the kind of numbers that have been produced by Porsche. So there are a lot of sort of core solid value elements to why it is that Tesla's is currently in a very strong position. Obviously you can watch it yourself, but I think that it's a rare opportunity to get a positive analyst to show up on CNBC while he was unmercifully attacked by a very poorly trained member or contributor to the CNBC staff. We thought it was amazing because the thumbnail you'll see is a picture of him, and if he could have strangled that lady, he would have, but in essence, he maintained his cool, just had some funny looks on his face as she spoke because she didn't have any basis. What he also pointed out is that I thought was amazing was that he made a comment where he said that Tesla had actually foisted production difficulties on itself, which were completely unnecessary. So when he made that comment, I have to admit, I just have the world of total respect for this guy because I thought that the production hell stuff was unnecessary, and to have someone at his stature actually confirm that, in my mind was pretty exciting. So in essence, what he stated was that the production hell was unnecessary, and that that's been worked out currently. And so one of the problems that's going on in the market in terms of evaluating Tesla is the fact that there's a lot of backwards sort of bad things that occurred in different ways. For example, production hell that are not part of Tesla's production going forward future. So I just think that, that's really exciting. There's a question mark that's out there right now, which is something I call the 3-day rule. So when an analyst raises like this, usually the hedge funds react quickly, i.e. the stock price movement today. Then what happens is you need about 3 days for the major firms to sort of bake in the core logic that this gentleman is presenting through the research report he presented. And so then you'll have the stock sort of pulling up with very, very large dollar capital, pushing the stock price up a few dollars on a daily basis. And so it'll be interesting to see what happens in this round because he actually made his statements back in mid-December, and it's now almost mid-January. So all institutions have had a chance to modify their positions based on his thought process, even though he didn't formally present his upgrade until now. So what this then means is that what should happen is in 3 days from now, you'll see the apex of the stock price sort of showing up just after that inquiry at 520. That apex could be 550, 580, based on large institutions now having a chance to trade his upgrade. Now, should that happen right now? I don't think it should happen, only because you really need those earnings to be flowing through, and you can sort of piece through how they're managing their finances to determine if everything is solid. And so we think that this is obviously good news. It's great to see Tesla in a stronger position. It's also a thrill to see CNBC finally get rid of Bob Lutz and start actually having announcers on who are basing the logic of what they're doing on what's happening in the marketplace. The final note of what he presented that was really stunned by is there's a comment he made. So he made numerous comments, and as you see the show, you'll notice that if you know a little bit about Tesla, you understand what he's talking about, even if the CNBC folks really don't. But the most stunning comment I thought he made was that he articulated that the fact that VW had introduced the Taycan with only 200 miles of range was a huge disappointment. So I was like, wow, the press has been generally kind to the vehicle. We're going to do a show on the car in the next couple of weeks here in Washington, D.C. And what we're trying to figure out is that the problem is when you push a car hard, it uses up a lot more battery very quickly. So if you only have a 200-mile range battery and you push it hard, are you in a 100-mile range or less zone, which means, for a fast-moving car that you can only be out there for a half hour, 45 minutes before you have to be home. And so there's a lot of elements like that you have to go back through to determine that the Europeans are kind of failing right now in their Tesla response. So what this implies or suggests is what this implies or suggests is that we're in a situation right now where it's entirely possible that most of the European OEMs will miss their agreed upon targets, and they could have as much as $9 billion in payments that'll be going towards the EU for not meeting the EV goals that they have. I'm starting getting questions. I'm about 3 minutes away from. We usually take questions to just finish up my comments, because folks that watch this afterwards always hammer me on the comments afterwards. So I will respond to your statements in a moment here. So in all, I just wanted to point out that we're in a situation right now where Tesla stock price is up. Did we think it'd get here? Yes, but we thought that the pressure to push the stock price up to this level would start to happen as we entered towards the February 18th timeframe. We are surprised to have an analyst come out and give the upgrade. If you look at the number of analysts that have reported, there are only like 3 or 4 of them that are over 500 in the 520, 530 range. And this is the first analyst that sort of pushed his number up to the 635 range. So we think that's great. So in general, I didn't, the only other addition I wanted to make this, we actually have a show coming on what is European demand looking like and why. One of the hints I wanted to give you on this show is we actually just figured out what I want to call a $60 billion question on Tesla. And what that question is why did the Chinese government spend $60 billion fueling its own EV manufacturers, but at the same time, they swung back around and have now they've spent probably $8 billion to help Tesla enter and be successful in their market space. And we're going to cover this a lot more in our next show, but the answer to that that's really amazing, is that Tesla is the only EV vehicle above $100,000 currently, And in the sub $30,000 market, there's nobody that can participate in that zone because it's all domestic. So yes, there are mid-price $50,000, $60,000 vehicles that are being sold in China currently, but the high end of their market is dominated by primarily German manufacturers. So when they decided to bring Tesla in, their the price point where Tesla operates is above where the largest market segment of their EV firms are operating. The loss of sales isn't necessarily from the big companies they've helped get started, even though there are some. The biggest loss of sales is by luxury brands that are foreign losing sales, be it Cadillac or all the OEMs from Germany. So yes, it's a loss to the country to some extent because the partners of those OEMs won't be making money even though they're well connected to government entities. So this kind of answers one of the questions that has been lurking as to why would they spend $50 billion helping to nurture their own EV market and then have that market completely blown away by the entrance of Tesla. And so I think you'll wound those that are directly competing with Tesla or just above. But for the largest footprint of where cars are being sold in China, not an issue. So interesting. I wanted to note that I'm starting to get some other comments here, and the real big question is, do you sell now and take your profits or not? I would say that again, the stock price should be around 450 or lower right now because we wanted the fundamentals to catch up. But I think what could happen over the next few days is other analysts will have to agree with Colin, and if they do, you could end up with the stock stabilizing where it is, 20 or 30 bucks above or below, but that's still well ahead of where it was only a week or two ago. So I think that the determinant on what's going to happen is, do other analysts like penguins jump off, and join Colin in his assessment, especially with the EV tax credit? And the answer could be like he pointed out, Tesla gets $1 billion a year for sure, particularly from the fiat portion of that relationship in Europe. If you have VW and Mercedes and or BMW join that group, all of a sudden that number could go higher, in theory, maybe double or triple that number. So, and then the next question is, how long would that last? His argument is it could last for a while, but at minimum that money is coming in for the next 2 years. The whole idea is if they keep not being able to provide vehicles that people want to buy, or for other reasons, not able to build a market presence, the duration of which you have that cash showing up, and the volume of that cash could be increasing. Interesting. Yeah, there was a discussion of anti-EV policies there. How about play some of the lithium stocks? There's a conversation rolling through, and I think what we're going to do is clip some of the comments that were made and post them elsewhere, at the end of the show, so you guys could see what else was being discussed. I actually think the stocks that are worth exploring right now there's a number of companies. So the goal of Tesla over the next, I guess it's 8 or 9 months, is they're currently making an effort. There's a question about a second gigafactory showing up in China, and we think that's going to happen, and we think it's going to be announced sometime heading towards summer of this year. And if that's announced, it's an illustration of what the anticipated production might be. And therefore, you could have the stock moving very, very dramatically higher as a result. And sort of that's there are people talking about Battery Day being a big day. I think the big day is going to be whether directly or indirectly, Tesla's going to articulate what their demand numbers are in China, because they didn't give us any reservation numbers. It was just implied, how heavy the demand has been, as well as how big a facility they're building, and the fact that they're recruiting for a second shift, even though they're producing at 87,000 vehicles a year. There's no doubt once the Model Y hits, they will not be able to produce enough to meet demand in China. So, so that sort of whole combination of things is what's affecting things right now. Um, Great. We just saw a note here about the deliveries of semi, and that's going to start affecting things, I think, big time. I'd love to find out where you saw the announcement, a semi delivery announcement, but if that's actually valid, I think that that's another reason why the stock would be up, because semi starting to be produced would also add more revenue, and the models have to be redone to analyze how that revenue might hit the balance sheet profit-wise and show further growth that Tesla is demonstrating as to why their stock price is booming as it is. So, any rate, this has been a kind of a Teslafaninsight update. Please remember to like and subscribe. We appreciate your taking time out to join us today. I have to admit, I have a man crush. I've become a big fan of Colin Russ at Oppenheimer because I think his logic is clear, and when challenged, he was able to back up, his arguments with sort of hardcore research data that suggests that Tesla's not only doing well, but they have a structure that lends themselves to doing extremely well going forward, hence the upgrade. There's one other thing that I wanted to note, and we have a show that we're developing right now about why people are going to Tesla at different places, and we had a show maybe a month ago, and we actually had one of our viewers switched from a M3 to the Model 3, and was just thrilled with how few the maintenance bills were and so forth. He's talking about a gigafactory happening in Africa. I think it's possible, but I don't think they can beat China in terms. I think you'll end up shipping from China before anything will be built in Africa. Is my assessment of that. But there's an interesting phenomenon which I think it's called the rule of the 100,000, and what that is that anytime a vehicle's count goes over 100,000, the costs start to decline. And the reason is because that's enough vehicles produced and sold that aftermarket people can start making products for that vehicle, and it helps sort of mellow out on the costs. So you'll notice that the cheapest cars to repair tend to be the ones from Japan because they have the highest volume and therefore the highest incentive for aftermarket companies to make parts for those vehicles. On the flip side of that, you'll notice that the German manufacturers are in a zone where they actually have a process where they may not get beyond 30 to 50,000 vehicles, and we think this is one of the big impactors on why the repair costs can be so extremely high. So, at any rate, just a reminder on our show, we always give our health tips at the end. Don't forget 25 leg lifts on a daily basis. S&P coming up, Eric, very good point in terms of Tesla's addition to that if they stay profitable over the next 3 quarters. Also remember, try out one of the 5-2 or some other diet related to fasting. Number 3 is make sure you don't go to bed within 2 hours of eating so the food digests 4 hours ideally so you're completely digested so there are no acid indigestion issues. Any rate, love the raging dialogue going back and forth. We're going to make copies of what you guys are talking about and pump it under the show as well. Want to again thank you for joining us. In German, we say tschüss. In French, au revoir. Lehitraot, Hebrew, Choda Hafez, Farsi. Zdravstvuyte, Russian, hello. Ni hao ma, Chinese, hello. Do widzenia, Serbian. Hedgedo from Sweden. And in Jamaica, we say Nuff respect wak Woodman. Thanks for joining us. Please remember to like and subscribe. We could use some help on Patreon as well, if you would. And if you want to hit us up directly, we do have our information below for PayPal as well. So could definitely use the support. working on improving all the equipment you see that we're using here. Look forward to our next conversation. Have a great day. Bye for now. Check out that CNBC show from December 18th with Colin Rust. And I think it's a rare opportunity at seeing a really good analyst do a great job. Thanks again, guys. Have a great day.